All right, welcome everybody. I'll just quickly introduce myself. You'll be hearing from Brad in a few minutes. So my name is David Young. I'm a vice president here at Cartesian focused on strategy and analytics. I want to thank Brad for what he's about to present, as well as the full team that you see pictured at the bottom of this slide. As you can imagine, a large group was involved in producing this excellent work. Before I get into the content of the report, I'm just going to spend a quick minute for those of you who are not familiar, introducing you to Cartesian. So at Cartesian, we are a specialist consultancy focused on strategy and analytics, and we serve the communication sector. All of our clients are communication service providers, trade associations, vendors, and investors into the communication space. We provide a broad range of consulting services focused on strategy and analytics, but including public policy work, economic analysis, and increasingly helping our clients make better use of AI. Cartesian is owned by Bounteous. Bounteous is a leader in IT services and AI. And along with Bounteous, both we and Bounteous, a lot of what we're doing these days is helping telecom operators make better use of AI. Cartesian has been around for over 30 years. So hopefully we're known to at least some of you on the call. All right, if we go to the next slide, just to introduce the report. So today we're going to cover the past, present, and future of residential fixed broadband in the United States. This report is based on data from the FCC. It's the FCC's broadband data collection, which is a tremendously rich and dense data set. However, there's some limitations to that data set. It's not as accessible as people would like. It takes some effort to download and process the data. It's also, it can be tricky to extract useful insights. And so we put this report together and we distribute it broadly, not just to our clients, but to our broader audience, in the hopes that we'll make the data insightful, accessible, and then also timely. So we put out this report and every report just a few weeks after the FCC updates the latest BDC data. And our hope is that folks will use this report to do the type of work that we do with our clients. That work includes using this data to track trends in the broadband market, using this data to get deep competitive intelligence on what's happening for individual providers or in individual geographies, using this data to identify M&A candidates, as well as using this data to support public policy and regulatory efforts. All right, so a little bit more about the report. So now I'm focused on, the right-hand side of the slide. We're not going to go through the full report today. Brad and I will be taking you through just a few highlights. We are going to touch on the three sections of the report. So those three sections are section number 1, what is the current state of broadband availability? Brad will be taking you through that. We'll be looking both at the most recent reporting period, so the last 6 months, and then putting that in the context of the full 4-year history of this FCC BDC data. The second section I'll be taking you through, and I'll be looking at who is building broadband. So we'll be looking at individual companies, individual logos, so the differences and what we can infer about the strategies of individual providers. And then lastly, we'll touch very briefly on where the broadband market is going, where we expect the next waves of broadband investment to be placed. So that'll be the last section. So before I leave this page and hand over to Brad, just a little bit more about our focus and the methodology that we're using. So in terms of our focus, this report is entirely focused on residential, so not business, fixed, so not mobile, broadband. We look at all types of broadband technology, but we're primarily focused on the technologies that are receiving the most investment and that are having the most competitive impact. So that's fiber and cable and LEO satellite and fixed wireless for the 3 major MNOs. Throughout the report, we will be using the FCC's definition of broadband serviceable locations. So when we talk about coverage or locations, we're always referencing broadband serviceable locations. Cartesian has added quite a bit in terms of metadata and different filters that we apply to the BDC data. We describe much of that in the methodology at the end of this report. So if you have questions, I'd suggest looking there, or feel free to reach out to Brad and me. So with that, I'll turn it over to you, Brad.
Thanks, David. The defining headline in this most recent release is not broadband expansion, but more how intensifying the broadband competition is becoming. Across the next several slides, we examine the technologies and market dynamics reshaping the competitive landscape, including fiber growth, expansion, and deployment trends. Let's start with what's driving that broadband expansion today, because that sets the stage for everything else we'll discuss. Coverage growth is increasingly becoming a two-horse race across fiber and licensed fixed wireless. These technologies continue to drive essentially all meaningful broadband coverage expansion. In the second half of 2025, fiber added around 4 percentage points, while licensed fixed wireless added just shy of 3. Cable remains remarkably stable at around 80%, and copper continues its slow and steady decline. As highlighted earlier, the biggest market shift isn't just more broadband coverage, it's more broadband competition. While Starlink drove the step change in 2023, the more interesting trend is within terrestrial competition, with 3 provider markets increasing over 3 percentage points in the last 6 months. 3 years ago, most locations had only 1 or 2 viable broadband providers. Today, 3 provider competition is becoming much more mainstream. For providers, coverage alone is becoming less of a competitive advantage. Customer experience, network performance, and other factors are becoming increasingly important as customers have more viable choices. Despite the increasing competition nationally, roughly 1/5 of locations remain effectively single provider markets, representing the largest remaining opportunity for private broadband investment. As broadband markets become more competitive, network performance, not just availability, is becoming a key differentiator. Gigabit download has become table stakes, as 91% of residential locations now have access to gigabit speeds. The next competitive differentiator is symmetrical gigabit, currently available at just 61% of locations, despite growing by 6 percentage points in the second half of 2025. Within gig download availability, 2 provider markets continue to see the highest rate of growth. The competitive conversation is shifting from can you offer gigabit to how does your gigabit service compare, with upload performance and symmetrical speeds emerging as key differentiators. These performance improvements reflect where and how providers are investing by technology types as well. Fiber investment continues to prioritize market expansion, most new deployment reaching locations that previously lacked fiber service. Cable footprint, by contrast, have remained largely unchanged. Within cable, the investment focus has shifted from geographic expansion to network upgrades, reflecting a more competitive broadband landscape. Now, fiber is clearly driving much of the wireline investment, but it's only one side of the broadband story. National carriers continue to rapidly expand across the United States. However, higher speed with 120 meg availability continues to grow, but at a much more measured pace. This gap suggests a targeted deployment strategy with premium FWA offerings concentrated where capacity and economics allow. Focusing on fiber and cable competition, there still remain significant differences in competition across US DMAs. The most competitive DMAs average over 2 providers per location, while the least competitive average fewer than 1. Taken together, these trends point to a market that's becoming increasingly more competitive, but not uniformly so. National average continue improving while competitive dynamics remain highly localized. With that overview, I'll hand it over to David to look at who is driving this investment.
Thank you, Brad. So I'm going to go through a few different slides in this section. Again, everything I'm going to talk about is provider specific. Brad laid out the general trends and themes at an industry or country level. And now we're going to be looking at which providers are actually the ones responsible for those trends. So in the slides that follow, I will talk about who are the biggest fiber builders in the past period. We'll also look at fixed wireless from the top 3 MNOs and coverage expansion trends there. We'll also take a bit of a deep dive into the differing network investment strategies of the major cable operators, the major MSOs. And then finally, we'll close the section by doing an M&A recap on the sector. All right, so with that, we can go to the next slide. All right, so this table shows you the top 25 fiber builders in the US, ranked in terms of how many new broadband serviceable locations they added with fiber in the second 6 months of 2025. So latter half of this year, who built the most fiber locations. And I love this table. I can't wait to see it every time we update our report every 6 months. There's actually quite a bit of change period over period. And I think the change in this table is really illustrative of the network build strategies of players, big and small. And I really like looking at who are the fast risers on this table. So I'm gonna dig a little bit into some of the trends that I see here. So first of all, looking at the top 10 providers, most of who you would expect are there, right? There's most of the major ILECs, with the notable exception of Verizon, are in the top 10 fiber builders for the last 6 months of 2025. We also see two of the overbuilders that have formed JVs with T-Mobile. And interestingly enough, two other recently announced M&A JVs with T-Mobile, so Greenlight Networks and Go NetSpeed, also appear lower down on the table. So 4 of the entities on this top 25 table are JVs with T-Mobile. What's also interesting on this table is that you see a number of MSOs, and I think it's an underappreciated and underreported trend how much MSOs are building fiber and not just relying on HFC symmetrical speed upgrades or HFC coverage expansion. So we see 6 MSOs in all in this table. I also like looking at this table to see which mid-tier operators have significantly gone up the ranks. And so we see companies like Mediacom and TDS and Ziply all rising significantly in second half of 2025 relative to the first half. We also see a number of small, lesser-known providers appearing or rapidly rising on this table. Companies like Blue Peak, Swift, IQ Fiber, and Intrepid, I think, are all companies to watch out for. The last thing I want to note before leaving this slide, I'm going to focus your attention on the rightmost 2 columns. So the rightmost column is the 4-year average. So over the average of the 4-year period, how much did a provider build fiber locations? And what I'm doing is I'm comparing that average over a 4-year period to the average in the most recent period. And what's notable to me is that nearly every provider on this top 25 list built more or considerably more fiber in the past 6 months than it did on average over the past 4 years. To me, that's a clear indication that we're in a sort of a golden period for fiber builds, and that this pace of fiber build is not just narrowly being driven by maybe a few big providers, but is broadly being supported by a broad number of providers in this space. All right, so if we move to the next slide, here we're shifting our focus to fixed wireless from the 3 major MNOs. And what we show for each of the MNOs, so going from left to right, AT&T, T-Mobile to Verizon, we're showing a time series. So 8 6-month periods for each MNO. We're showing their pace and also speed fixed wireless coverage expansion. So I'll go through each in turn, just starting first with AT&T. You can see that relative to T-Mobile and Verizon, AT&T was a bit late to fixed wireless, and then it started building more aggressively about 2 years ago. And you can see from the coloring in the bars that the majority of T-Mobile's fixed wireless build has been on sort of this mid-speed tier, so between 25.3 and 120 speeds. By contrast, T-Mobile was very early. They were really the first MNO aggressively pushing fixed wireless. So they had coverage expansion that preceded this BDC data set. And then in the 4 years that have followed, T-Mobile's coverage expansion has been relatively modest. What they've been doing is shifting their mix of speed slightly towards higher speed. The one thing I want to add, and it's not shown on this slide, is that T-Mobile's coverage, although it seems to be relatively flat apart from the speed mix, is actually changing quite a bit. So from one reporting period, from 6 months to the next 6 months, only about 80 to 85% of T-Mobile's locations stay the same. T-Mobile's dropping and adding about 20 to 25% of locations every period. So, fixed wireless, particularly T-Mobile's, is quite unlike, say, a fiber build, where once a fiber is built by an ISP, we have very, very high retention of fiber service the next reporting period and the next reporting period and so on. But fixed wireless is a much more dynamically deployed invested service. This goes along with the stated network investment strategies of all of these providers, who are all generally using a fallow capacity model. They're not necessarily investing new CapEx to deploy fixed wireless. They are rather using their mobile network traffic models to identify pockets where they have capacity, and then turning on for marketing sales those micro geographies when they have spare capacity. And so we see that very clearly in the change in T-Mobile's coverage at a location level period over period. And then finally, moving on to Verizon, what jumps out from the chart on Verizon is that Verizon had very significant coverage expansion in the most recent period. And notably, Verizon's coverage expansion is really driven by this sort of mid-tier, mid-speed tier. So Verizon has made the decision more recently to focus fixed wireless coverage expansion on mid-speeds. So I think that's a really interesting question, right? What speed levels are necessary to really have the market and competitive impact that these providers are looking for? All right, if we go to the next slide, wanted to dig a little bit into the network investment strategies of the top 4 MSOs. So what we're looking at here, these Sankey diagrams, as they're called, what they do is they depict the change in coverage of each of these providers from the first half of 2025 to the second half of 2020. So at the left of each one of these charts, you can see the percentage of locations that were either upgraded by the MSO, so upgraded usually from HFC to fiber, or new locations that were added. So these are coverage expansion. And what's notable is that Cox is really the outlier here in having significant network upgrades. The other 3 MSOs are investing much more heavily in network expansion than they are in upgrades, at least as it relates to the BDC data. And now on the right-hand side of each one of these Sankey charts, you can see how much each one of these MSOs is investing in fiber versus HFC. And I wanted to show this slide because we've reached I think a really important milestone for all of these 4 MSOs, in that all 4 of them, more than 50% of the locations that they upgraded in the period were upgraded to fiber and not to HFC. And we haven't seen that for quite some time. So I think, again, this is part of the underappreciated, slow, but I think strategically meaningful shift of MSOs towards fiber. All right, so if we go to the next slide, this is the last slide in the section. This is a table of the largest ISPs in the United States, so ranked in terms of total coverage. So total coverage across fiber and cable and copper. And what we've done with our shading is show the providers that have been involved in M&A. Now, there's a little bit of lag in the BDC data. So although the FCC will eventually roll up M&A into the parent company, what we've done here is do those roll up manually for mergers that have either closed but not been reflected in the FCC data, or mergers that have been announced but not yet closed. And so what you see very clearly from the shaded rows is that the M&A activity, and this won't be a surprise to anyone, is really driven by the consolidators, by the largest providers. 6 of the top 10 in terms of ranked by size have recent or pending M&A. And so I think industry watchers are all looking to the next tier, the mid-tier of ISPs, as very likely acquisition targets as over the next few years. So it's quite notable that the big ISPs are becoming bigger. And in the second half of 2025 alone, more than 20 million locations were added to these 6 top ISPs that have announced or completed M&A. All right, so that closes this section. If we move forward one slide, please. I'm just going to talk about one slide in this next section, which is a look forward in terms of where investment is going. We flip ahead one slide. All right, so I want to spend just a few minutes on this framework. We find this framework very useful for making sense of where we are today and where the market is going. So what this stacked bar chart shows is it splits the United States into 4 regions. Every location is categorized based on the number of fiber plus cable providers serving that location. And we think fiber plus cable is the right set of technologies to look at for a number of reasons. So one, satellite is everywhere. So in terms of geographic variability, not super important to look at satellite. Fixed wireless, I mentioned earlier on this call that there's quite a bit of variability period over period in when fixed wireless is available. So generally the long-term fiber investment decisions that we Cartesian are involved with generally don't pay as much attention to fixed wireless availability. A lot of those investment decisions are really driven by the number of current or expected fiber plus cable providers, right? Copper is no longer viewed as a material competitor. So it really comes down to how many providers are going to divvy up the share, the non-satellite, non-fixed wireless share that's available at a particular location. So as we go through this bar chart, starting at the bottom, we have locations that don't yet have a fiber or cable location. Generally, these are rural areas. And generally, our expectation, what we've seen historically, is that these areas receive public funding, be they BEAD or capital projects funds or various state initiatives are often funding broadband coverage expansion to areas with no providers, with the hopes of making those unserved locations served. The next cohort, these are locations with one cable or fiber provider. These are typically the areas that are receiving the focus of private equity investment or investment by existing ISPs that are looking to expand their coverage. And the business logic is clear, right? It is much easier to justify a business case. Most business cases expect something like 40% share capture within 3-4 years. The best way to get there is to build into areas that only have one provider, such that by entering that area by presumably offering fiber, you can have a reasonable expectation of perhaps reaching 40% share within a few years. So the focus of near-term non-public investment is really those areas with one provider today. And what we've seen in terms of the multi-year time trend is little by little, the areas with 0 providers today or 1 provider today are being whittled away and being replaced with areas with 2 or 3 providers. And I wanted to spend some time on this slide today because we've reached, I think, an important milestone. More than 50% of the locations in the BSL data set now have 2 or more providers. So we've tipped over to the majority of locations being pretty adequately served in terms of public or private. All right, so with that, I'll conclude my remarks today. Thank you all for your time and attention. And again, I'm going to repeat the offer that Tom made at the beginning of the call, which is if you'd like to learn more about this data, understand more about our report, or speak to us for any reason, Brad and I are here and happy to speak to you. Thanks so much for your time.
Thanks, everyone.